This chart signifies that gold is potentially about to crash. This chart is showing US 10-year real yields versus the price of gold. We have seen since 2012, there has been an almost perfect correlation throughout the times between these two. And what just happened? Real yields just absolutely plummeted back down to earth. We were very high into the negative category because inflation was running rampant and yields were still very, very low. Now that yields have gone up to 3%, real yields have came back positive. And because of that, the price of gold has a very high chance of really crashing down in the next few quarters. Why is this actually an incredible opportunity? Me and Justin are already probably extremely long gold and silver, but if this does happen, it would get immensely cheaper. And I would absolutely love to buy more. Justin, I think you're going to take us on a trip through what would happen during a liquidity crisis.
Okay, so Josh, right here, if you can see this cursor on the thing, this is COVID or whatever, right? As soon as the market broke, basically gold, crapped out or whatever, right? Bounced back pretty strong, rallied, traded, went back up, and then again you see it peaking off right here. The mainstream media narrative that I've seen to suggest this recent sell-off is the fact that the market suddenly realizes or has come to realize that the Fed's going to get tough on inflation and actually carry through with it. Therefore, they will raise interest rates. If they're raising interest rates, it makes parking money in the dollar more attractive. Therefore, you'll have money going out of gold or commodities into the dollar. Or at least that's again the popular narrative. Maybe not true. Don't know the ins and outs on that front. But I wanted to go back to 2008. So right here, this is, starting in 2008 or whatever right here. So here's my question, Josh, is that if you do have a liquidity crisis, people will scramble for cash. In other words, they're going to sell whatever they can, not necessarily what they want to sell. And one of gold's superpowers is that there has always been, and presumably, hopefully always will be, a deep liquid market for gold. Now you've done a bunch of gold on the market, all of a sudden you might see the price go down or whatever, right? But generally, if you see it go down, bam, down, bam, eventually, it comes back up as people flee back into to a risk-off asset. So I kind of use the example, and I think Buffett was right when he said, you see like the tidal wave, going out, because before the tidal wave hits, all the water goes out. So the water goes out, you see, as Buffett would say, who's swimming naked, and then all of a sudden it comes roaring back in. As far as that goes. The other thing I would kind of point out there is that I think it was something that Johnson said, Manarino's echoed it from time to time, and probably other people who are far smarter than I, where they mentioned the comment about the fact that you can have both the dollar rising and gold rising at the same time. And again, if you think about what I said earlier, this isn't very actually intuitive, right? Because typically a strong dollar or high interest rate suggests that, commodities or gold, silver, whatever price will be going down. But if both of these things happen at the same time, that would be somewhat uncharted territory.
It also depends what currency you're in. If we're looking at just currencies right now, the gold relative to the dollar is down massively on the year. Just that's because the dollar is rising relative to gold. But if you look at the euro, I mean, I'm pretty sure gold's up like 13, 14% on the year. That's just because the euro's currency is actually tanking pretty hard. And then if you look at it in terms of real stuff, I'm sure gold's going to maintain its purchasing power no matter what. What is the role of gold during the long term? I see a lot of people, the gold bugs and the Bitcoin bugs, kind of conflating this. Gold, I think Justin says it best, is simply just a financial checkpoint. It is a way that you stay rich. You don't get rich by buying gold ever. Gold is never going to exceed your purchasing power. It is simply going to maintain it. If you want to get rich off speculating that you think the price of gold is going to go up, you have to speculate in the miners section through the gold and silver.
Absolutely. And I guess the other thing I would say too on that front is that I think that there has been, I think, a concerted effort to quote, Andy Scheckman, to use the price of gold and silver, I guess, and platinum and the others as a tool of misdirection.
I disagree with you, but keep going, and then I'll give my push back.
Yeah, so it comes back into COMEX and like how things are priced, in the sense that, if you have more paper claims for the product than actually exists, and if people suddenly demand to have it's the GameStop thing all over again. If people demand, more, if people demand to take delivery of all the stuff, COMEX is essentially going to default on that because they don't have the gold to back it up, or silver or whatever to back it up. Consider what happened with Josh, help me out, nickel. There you go. There's a good example of that.
The reason, I completely agree. I think that's why decentralization is actually fantastic, because you can actually keep that supply cap. But the reason why I don't think the price of gold is too manipulated is because I think it's extremely fair valued right now. I just think that the market was never convinced that we were going into long-term inflation. And there's so many countries right now with a rising dollar that is being forced to sell off their gold because they need to get dollars to actually fund in the actual market. market. I mean,
Yeah.
this entire time, I think this is real countries selling their gold because of this rising dollar that is driving down the price. And I think these trends are going to continue if we do see that liquidity crisis like we saw in 2008 and March of 2020, and we saw that gold just rip down. Looking back at this chart, it makes sense that we could see a crash in chart. Just if we go back down to exactly where real yields are right now, we could see 1,300 gold price. Do I think that's likely? I'm not sure.
So here's the question too, that obviously we can see the real yields, cratering on the right-hand side with that gray thing going all the way down. Why hasn't gold gone down? And granted, it's gone down, but surely it must have gone down more. Look at the correlation between all of that. See, when I look at that mark right there, you could say, well, it's just waiting to happen. Perhaps that is the case. But maybe the flip side, or the not counter thesis, but maybe the question that remains unanswered on this is that why is it taking gold so long to respond?
Well, look, if you're looking at this, gold is almost always a falling indicator. It seems like real yields tend to move first, and then gold kind of follows. If we're just going at this chart, it's almost a perfect correlation to gold following real yields. Almost never gold track.
Go back, no, but look at the middle of 13. Look at the middle of 13 right there. So that's probably the biggest drop you see right there.
Mm-hmm.
Notice how gold falls off. But see, there it's the exact opposite. Gold's leading, and then yields follow. And see, like my comment is this: like if you were to do like a mathematical calculation of what's the delta, what's the difference between those 2 points on the thing, it's never been higher than right there at the very end. Now I don't know if that just means gold's about to shit the bed. I don't know if that means that gold's actually holding up. So like that's one of those things where this gets back to this to this smoke and mirrors of cross currents or whatever, right?
Yeah.
But in any event, the one thing that I do feel pretty confident, and this is one thing that kind of frames my thinking on this, is that as it stands right now, when people need to sell something to raise dollars, and I think people are going to have to sell whatever they need to sell to raise dollars, because I do think that you're seeing Johnson's dollar milkshake theory play out. They will sell whatever they can, not necessarily what they want. And one of the things they will be able to sell is gold due to the deep liquid marketplace of the yellow metal.
Yeah, absolutely, extraordinarily long term. And if we do start to see a ripping downside, I will personally be buying a lot of it. Thank you, and we'll see you on the next one.